Hi, and welcome back to Sticking It to the Taxman. I'm Marc Lichtenfeld. This is part 2 on our discussion of how to allocate your portfolio in the most tax-efficient way possible. Now, if you didn't see part 1, I'd suggest you go back and watch that video and then come back to this one for part 2. Last time we talked about which types of investments should go in your tax-deferred accounts like IRAs and 401ks. Today, we're going to talk about which investments make sense to keep in your taxable account. Now remember, a taxable account is anything other than an account where your income and capital gains are deferred, like an IRA, 401k, or 529. And a taxable account is often just your regular brokerage account or bank account. And so we're going to get into the details of which types of investments actually belong in your taxable account. Now, while most investments like dividend payers and real estate investment trusts and bonds belong in your tax-deferred accounts if possible to shield them from taxes, there are certain investment vehicles that belong in the taxable accounts. And we're going to go over 3 of them today, including one exception to the rule. Now, I recommend stocks for taxable accounts for very specific reasons. If a dividend consists mostly of return of capital, meaning that you're receiving back a portion of your original investment, it's already tax-deferred. If you hold it in a tax-deferred account, it may take the place of a less tax-efficient investment that should be in a tax-deferred account. One of these types of investments is a master limited partnership, or MLP. MLPs are stocks, usually in the energy sector, and they pay their own kind of dividend, which is called a distribution. These distributions are already tax efficient because they are either entirely or mostly considered return of capital. As a shareholder of an MLP, you will pay capital gains tax on the stock when it's sold, but the entire time that it's held, you will not pay tax on the return of capital portion of your income, so it's not necessary to shelter it from tax in an IRA or 401k. However, MLPs can be volatile. When energy prices fall, MLPs typically drop as well. So again, as with the case with REITs, an MLP can be a great addition to an income generation portfolio, but don't load up on them or you'll find yourself overweight in one sector. Additionally, some stocks that have a return of capital component to the dividend generate something called unrelated business taxable income, or UBTI. If you have $1,000 in UBTI in your tax-deferred account, you'll likely have to pay tax on that money and possibly penalties as well. Lastly, you should consider holding international stocks in your taxable account. Many international stocks have taxes taken out of their dividends by their home countries before you receive them. If those stocks are held in a taxable account, you get a credit for that money from the IRS on your taxes. If those stocks are held in a tax-deferred account, the foreign government will still take the tax out of the dividend, but you will not receive a tax credit from the IRS. That money is gone forever. Exceptions to this rule come from dividend-paying stocks based out of the UK, like GlaxoSmithKline, and Canada. Though the company is based in Brentford, England, and would qualify as an international stock, the U.S. holds a tax treaty with the U.K. where the U.K. will not take taxes out of U.S. investors' dividends. In this case, you could treat dividend-paying stocks from the U.K. the same way you would treat domestic ones and save on your taxes by automatically reinvesting the dividends you receive in a non-taxable or tax-deferred account. Now remember, there are limits on how much you can contribute to a tax-deferred account, so make sure you're filling that account with investments that need protection from the IRS. The investments I just discussed, MLPs and other partnerships, as well as foreign stocks, will do just fine in your regular brokerage account. This is our final episode of Sticking It to the Taxman. I hope that we helped you stick it to the taxman this season and optimize your income. If you have any further questions, please leave them in the comment section below and chime in with anything that you want to hear about in future series. We have a lot of exciting things coming up in 2020, and we would love your input on what you want to hear about. Also, head to the description below and click on the link to get our free e-letter, Wealthy Retirement. We have lots of great income generating ideas and money saving ideas in Wealthy Retirement, so I know you'll enjoy that as well. Thanks again for watching. I'm Marc Lichtenfeld. We'll see you next time.